Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing NVIDIA stock so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 1.1 trillion market cap. They're trading at $4.60 a share, and they have 2.5 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had really big growth from 2021 to 2022, 8.1 billion. That was the highest ever up to that point. Then it dropped a lot in 2023, a little under 4 billion. But in the trailing 12 months, they've blown up. So has the stock. It's over 10 billion. They've already completed their 2023 fiscal year. They're currently working on their 2024 fiscal year, even though we're in 2023. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that has a similar trend, jumping up a lot from 2021 to 2022, and down in 2023, then up really big in the trailing 12 months. Ironically, their net income is almost identical to their free cash flow. That's usually not the case. Revenue is a sales for the company, and that doubles from 2021 to the trailing 12 months. So they're firing from all cylinders. Everything's working right for this company. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 680 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $577 billion. We divide that by 2.5 billion shares. And we get a calculated stock price at $234. They're trading at $460, so they're trading at a 97% premium. It's a strong sell according to the model. My model was a lot lower, like 170, 180. I did some massaging of the numbers, and I used a best case scenario for every situation. Their revenue growth is really substantial for the next few years, and my model has them at the top of the revenue range. Same thing with the free cash flow. I gave them the lowest whack possible, and the stock still seems really overvalued. But when do you short the stock? Is now a good time? Maybe it's going to hit 1.5 trillion market cap. I don't know, but it seems overvalued. It seemed that way for a really long time now. There are 62 companies in the same industry as NVIDIA, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They're a fabless company. They outsource the manufacturing for semiconductor chips, so their CapEx isn't that big. It is bigger than average, but it's much smaller than some of these other companies. Taiwan Semiconductor is the largest foundry. They do only manufacturing. They don't design chips. They do a lot of the manufacturing for NVIDIA. Intel is a foundry and fabless. NVIDIA's debt to equity ratio is 0.5. For every dollar of equity, they have 50 cents of debt. That's between the median and average. They pay a really tiny dividend. When you round it, it's 0%. They generate lots of free cash flow, over 10 billion. Broadcom is number 1 at 17 billion. They're by far the biggest company, 1.1 trillion market cap. Just last year, Taiwan Semiconductor was the largest, but they flip-flop for about a year and a half now. And according to their price multiples, they seem really overvalued. But investors are still willing to pay a premium for this company. The best price to free cash flow is 11.5 Skyworks. That seems like a good value. They generate lots of revenue. Taiwan Semiconductor is the largest. Intel used to be the largest, now they're the second largest. But NVIDIA's 5-year annual revenue growth rate is really high at 19%. Look at AMD, 28%. The biggest is Monolithic Power, 29%. They just released their 7/31 financial results. That's their second quarter of 2024. Their fiscal year ends January 31st. And they crush earnings. They beat it by 29%. They also crush revenue by 21%. They reported 13.5 billion of revenue. So the stock went up a lot. They also beat earnings and revenue last quarter and the quarter before that. Their next financials are to be reported November 21st. That's for their third quarter 2024. Their 10/31 results. They've done 5 stock splits. They may be doing another one this year or next. Just 2 years ago, they did a 4-for-1. a 3-for-2 in 2007, a 2-for-1 in 2006, and a 2-for-1 in 2001 and 2000. If you put $10,000 into this company 10 years ago, you might be able to retire at $1.3 million today. Let's go through their second quarter earnings release. They had record revenue, up 88% from the prior quarter, up 101% from a year ago. Their data center revenue did even better, up 141% from last quarter, 171% from last year. They returned $3.38 billion to shareholders. Most of that was buybacks, $3.28 billion in buybacks. Their board approved another $25 billion in share buybacks with no expiration date. Their dividend is really small, 4 cents per share. Next quarter, they expect revenue to be $16 billion, which will be another massive leap. Let's look at their income statement. Revenue of $13.5 billion compared to $6.7 billion in the same period in 2022. For the trailing 2 quarters, revenue of $21 billion, up from $15 billion. Their cost of revenue this quarter is $4 billion. These are all the expenses directly related to generating the revenue, directly related to generating the $13.5 billion. Revenue minus cost of revenue is $9.5 billion. Not only did their revenue go up a lot, their margins went up a lot. Their gross profit margin is 70%, up from 65% last quarter. And it was only 44% last year in the second quarter of 2023. Gross margin is gross profit over revenue. It's how well you convert revenue into gross profit. Let's go back to the income statement. Operating expenses, R&D, $2 billion, up from $1.8 billion last year. SG&A, $600 million. Total operating expenses, $2.7 billion. Operating income up a lot from $500 million to $6.8 billion. So their net income for the quarter is $6.2 billion, up from $650 million. EPS $2.50 compared to 26 cents last year. And they have a little less shares outstanding. Last year was 2.49 billion, now it's 2.47 billion. Let's look at the balance sheet. 29 billion of current assets, 10 billion of current liabilities. So their current ratio is 3. They can cover their current liabilities with their current assets 3 times. So they're highly liquid. They have lots of cash, 16 billion of cash. They're owed 7 billion from their customers. They have 4.3 billion of inventory. That is lower from last year of 5.2 billion. Prepaid expenses of 1.4 billion. This is when a company makes an advance payment for a product or service they're going to receive in the future. They have 3.8 billion of PP&E, 4.4 billion of goodwill. Goodwill is the premium you pay when you acquire another company. And deferred income taxes of 5.4 billion. These are taxes a company will eventually pay but are not due yet. They only have 1.9 billion of accounts payable. This is how much money they owe other companies. Accrued liabilities of 7.2 billion. This means they incurred an expense but haven't paid it yet. 1.2 billion on the short-term portion of their long-term debt. 8.5 billion of their debt is due beyond 12 months. 1.2 billion is due within 12 months. And they have 27.5 billion of equity. Equity is assets minus liabilities. It's the value of the company according to the balance sheet, up from 22 billion last year. Let's look at their statement of cash flows. In the first section is operating cash flow. That's how much cash the company generates from its operational business. It's net income converted to cash, because net income is your accounting profit or loss. It's not actual cash. They generated 6.3 billion this quarter. The same quarter last year, they generated 1.3 billion. In their investing section, they spent 289 million in PP&E. Last year was 430 million. In the financing section, we could see the dividends paid, equity and debt issuances. They repurchased 3.1 billion of common stock. Last year, 3.3 billion. They paid down 1.25 billion of debt. And they paid out only 99 million of dividends. Let's take a look at the stock on Simply Wall Street. Its last price $460, market cap $1.1 trillion, up 6% in the past week, up 183% in the past year. Let's learn a little more about the company. They provide graphics and networking solutions in the US, Taiwan, China, and internationally. Their graphics segment offers GeForce GPUs for gaming and PCs, the GeForce Now game streaming service and related infrastructure, also solutions for gaming platforms. Quadro NVIDIA RTX GPUs for enterprise workstations, vGPU software for cloud-based visual and virtual computing, automotive platforms for infotainment systems, and Omniverse software for building 3D designs and virtual worlds. Its compute and networking segment provides data center platforms and systems for AI, HPC, and accelerated computing. Mellanox networking and interconnect solutions, automotive AI cockpit, autonomous driving development agreements, and autonomous vehicle solutions, cryptocurrency mining processors, Jetson for robotics and embedded platforms, and NVIDIA AI Enterprise and other software. Their products are used in gaming, professional visualization, data center, and automotive markets. They sell their products to OEMs, original device manufacturers, system builders, add-in board manufacturers, retailers, distributors, independent software vendors, internet and cloud service providers, automotive manufacturers, and tier 1 automotive suppliers, mapping companies, startups, and other ecosystem participants. It has a large collaboration with Kroger, the grocery store chain. The company started in 1993, headquartered in Santa Clara, California. The one risk they list is significant insider selling over the last 3 months. We'll look at that section a little bit. One equity analyst says the stock is 4% undervalued. Another equity analyst says it's 136% overvalued. If you're really bullish on a stock, you can find a number of analysts saying the stock is undervalued. If you're really bearish on a stock, you can find plenty of analysts saying it's overvalued. But that goes with anything in life. If you really enjoy eating steak, you can find plenty of people saying they love steak, steak is good for you. If you hate steak, you can find plenty of people saying steak is bad for you, don't eat it. It's like that with anything in life. So it's hard to tell on this chart because it goes back to 1999. But it looks like the stock was pretty flat, going up a little bit from 99 to 2016. Then it went up steadily from 2016, it was $15.50 to 2018, $68. And then from 2018 to 2019, the stock traded sideways. In 2020, it really shot up. It went from 66 to 315. Then it came down to 120. And I thought it would keep coming down, but that didn't happen. It went to the moon. It went from a little over $100, and it's currently trading almost at its all-time high. Its all-time high was last month. It hit 475. But it looks like it's going to keep going up. It could go to 500, 600, 1,000. It's kind of like Tesla. It just kept going up. Simply Wall Street says the stock is 28% overvalued. Their price target is 360. 48 analysts priced this stock at 622. They say it's 35% undervalued. Look how much their revenue has gone up over the years. It was $4 billion in 2012. Growing to $12.5 billion in 2018. It came down a little in 2019 to $10 billion. Then it shot way up to $30 billion in 2022. Dropped a little bit to $26 billion in the beginning of 2023. Now their trailing 12-month revenue is $33 billion. And look how much their revenue is projected to grow. By January 2024, their revenue forecast is $54 billion. A year later, $74 billion. A year after that, $91 billion. I can't imagine it growing at this rate, but if AI grows like we think it will grow, then I guess it's possible. This red line is their debt balance. They had no debt in 2013. They started adding debt in 2014. In the beginning of 2020, they only had $2 billion. Their peak was $12 billion in mid-2021. It's currently $9.7 billion. But their equity is always a good amount higher than their debt. Their equity is $27.5 billion, so their debt to equity ratio is 35%, which is really good. And the green line is their cash balance. They always have more cash than debt, so they can pay off all their debt if they wanted to. But the debt is usually 2, 3, 4% interest, and they're growing at a much larger rate than that, so there's no need to pay down the debt. Their next dividend is $9.28. If you want to get that dividend, you have to have the stock by 9.5 or before. If you buy it at 9.6 or after, you won't get that dividend. In 2013, they were paying an 8.5-cent dividend. That's their annual dividend per share. They grew it to 16 cents by 2018, and they kept it at that number ever since then. The forecast is for the dividend to be 17.5 cents by 2026. But they were paying a high yield because the stock was a lot lower back in 2013. It was 2%. But they barely raised their dividend and their stock went up a lot. So that brings their yield down. I think they may have the lowest yield of any company that pays a dividend. Their yield is 3/100ths of 1%, 0.03%. The CEO's salary is $1 million, total compensation $21 million. He's been CEO a long time, 30 years. There's been only insider selling in the past 12 months, no buying. So you can see all these sells, over 100,000 shares, over 100,000, 100,000, over 200,000. So about 1 million shares have been sold in the past year. None have been purchased. 2/3 of the company is held by institutions, 29% by the general public, and 4% by insiders. Their biggest shareholder is Vanguard at 8%, BlackRock at 7%, then Fidelity at 5%, the CEO at 3.5%, JP Morgan at 1.1%, TIAA-CREF 0.7%, Eaton Vance 0.6%, Global Quality Growth Partners 0.5%, Goldman 0.5%, Schwab, AllianceBernstein, lots of big companies. The largest asset manager of Europe, the French company Amundi, 0.5%. Their employee count has been going up a lot. It was 8,000 in 2013. They're currently at 26,000, the highest ever. The stock trades in a lot of places: the Nasdaq, Xetra, Deutsche Börse, Mexican Bolsa, Swiss, Borsa Italiana, Wiener Börse, Lima Bolsa, Bulgaria, Kazakhstan, BATS Europe, Buenos Aires, Sao Paulo, and the NEO. The NEO is a stock exchange in Canada. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.